All right, good morning. Let me just get the YouTube chat going. Hey, it's Central Bank Day. Lots of people doing nothing except turkey. There we go. All right, got it working. So good morning, everybody. Welcome, welcome, welcome. Today is... Can't even see that anymore. My eyes are so bad. It's not even popping up, no wonder. I can't read that. What is it? Thursday, September 13th, 2018. This is your daily Forex trading strategy session. Live on the Forex.Today YouTube channel. Hang on, got to get the coffee going. So anyways, good to see everybody. Good morning. How are you? Comment allez-vous? So today is a Thursday. Actually, I didn't even look. I assume the Bank of England didn't do anything. I guess I should check that first, right? I'm like, I'm just going to go eat breakfast. Bank of England ain't going to do nothing. But actually, I'm not entirely sure. We'll have to figure that out. And then the ECB's got their interest rate decision and all that kind of stuff. Turkey, it seems like they raised interest rates, but, I've been eating breakfast. I'm a busy guy. But lots of things going on. So, yeah, Turkey, Europe, and England all making interest rate decisions today. But why not? It's a Thursday, right? With that said, hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonald. It's really nice to meet you. I am the Chief FX Market Strategist for TradersWay.com. I do these sessions every single day with the overriding goal of helping you put together trade plans throughout this New York trading session. The idea, of course, is to use fundamental analysis, and today macroeconomics in the form of central banking policy. I mean, that's a big thing, right? Long-term technical analysis to create a bias, and then shorter-term technical analysis to enter and exit trades. So that's what we're kind of looking for today. I tend to look at the medium trend because I can't sit here and hold your hand, 20 hours a day. But I try to get you going, so that you have a plan to go in one direction or the other, and at least levels of support and resistance. And then I try to teach you the smaller techniques for entering and exit the trade. But at the end of the day, I want you to be an independent trader. I don't want you to have to listen to me or listen to anybody else or listen to the TV or an expert, a talking head on TV said, oh, you should do this or that. I want you to be a completely independently thinking currency trader in the sense that you can do your own analysis and make your own decisions, and everyone else is wrong. You're the expert. All right. So I want to get you there both technically and fundamentally. So make sure if you're on the if you are on YouTube right now, make sure you like and subscribe. That's important because when I do these live events, you will be brought to them directly and quickly and easily. That's the benefit of subscribing. And if you're watching a recording of this, then would you be so kind as to say hello or thank you? Yeah, I do have a disco party going on behind me. I apologize for that. I haven't gotten to the point to change the settings. Yeah, my bad. It's just, what can I do? It's there. I'm part way through my build. So, anyways, let's do some analyses. What I did here is I brought up Pound Aussie. Was this where we left off? We talked about Pound Aussie recently anyways. And we had it set up like if you're a bull, you're hoping to not just kick off this bottom channel, but kick off this bottom support. Okay. And funny thing is, if that didn't work, you know, maybe a false rally on a breakout and then down. That hasn't really done either. In the last few minutes, you got this drop in the pound. You can see it's a lower low, lower high, lower low, lower high scenario. But on the long run, kind of meaningless, right? Good morning, Daniel. Yeah, Luis. Yeah, well, I've been busy. I mean, I'm a busy dude. So I'm really happy to have them back up and running, stuff like that. I know it's been a couple of months. It's just busy. Anyways, so yeah, so I'm looking at the pound here across the board, and a little bit stronger, a little bit stronger, a little bit stronger, but general, right? Or weaker, 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 neutral. So really not a lot going on over there. Now on the euro side, the decision is coming up, and then there's a press conference. It's weird. I only have 2 currencies on here, and they're strange. Anyways, here's Euro Kiwi versus Euro Aussie. Someone must have asked. That's why I have them up here. Notice how Euro Kiwi being quite weak these days, rallied up and hit the monthly and weekly target. So this is the cluster, and is done. Notice how well it held. Right? Isn't that interesting? It's crazy, right? Look at just up, up, up. Like, let's go through it. Up, 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 down, down, buy. 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 Up, up, right? And then there's even little ones inside of them. Up, 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 down, down, buy. 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 And then it hits the target. Here's the coolest thing. Down, 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 lower, low. Up, up, sell. Right? Down, 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 up, up, sell. Down, 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 up, up, sell. Until maybe now it's reversing back around the other way. But here's a pair that's beautifully tradable, isn't it? On these like 15-minute kind of swings, if you want to call them that, on the daily swings. Okay, you can see there's a benefit for trading in the direction of the trend, isn't there? Beautiful. Kiwi's been very weak for quite some time, and Euro's been punishing it. Now, looking at Euro Aussie here, it's not at the monthly top, but it is at monthly resistance, and it does seem to be using these pivot points beautifully, right? Now, this is a perfect sell for bears. Nobody got it. Buy, you know, you're out of position as a bull. Buying at the 21 is the situation, or the response to this. If you're going to trade it and buy it overbought, it's generally not a great thing. But anyways, you know, after this interest rate decision, you know, one may expect a move like that. Okay. Of course, plan B, if you were going to try to continue mission here, plan B would be down here, right? One or the other, so you got to be ready. Probably the real move will probably happen at the press conference. You are the one, only you, beneath the moon and under the sun. Caught in the range. Okay. I think we talked about that last Thursday, didn't we? That even though it made a big move down, I fear that it's just kind of moving up, staying in the range. Anyways, it's still doing that. Right? It'd be great if it could break to the upside. Right? Because I actually want this to go up. Not that I like euro so much, but I'd like dollar to weaken. That's the first part of the whole thing. But also, maybe money could flow to Europe again because it's a decent deal. You can buy companies cheap again, and interest rates are still low and all that kind of stuff. Okay? In the end of the, you can look at it, nothing's really happened for 2 weeks. Not a big deal. Okay? That's where we are overall. Okay, remember our general plan was buy it here or buy it there. I don't know if you stick to these plans or not, but when you plan it out, a lot of the stress can go away. And that was a big focus at the beginning of my book was you plan, and by planning you remove the stress. Because stress comes from not being able to sort of predict the future, or another way of saying it, stress comes from the unknown. But if you're sitting waiting for your trade plan, it's a lot less stressful than throwing down trades and watching you lose money. Watching yourself lose money, right? So you can see this is a pretty basic plan. Buy at support. It's clearly support. And then plan B is way down here. And it's not even on the chart. It's so far to the right. But that would be a double bottom. So you can say, yeah, I'd buy it around here, or I'd buy it around there. You're like, oh, yeah, well, nice and easy, right? Not too stressful, not out of control. So no change. You can see it right here, right? No change. So the real news is going to be press conference. Cool. Press conference coming up. Yeah. Cool. Now, we were talking about how we are awaiting a potential change in trend with the Aussie yen. Is this it? Changing interest rates in Turkey should, or what they're hoping is to attract money to Turkey. See, Turks have tried to find a way to get their money out of Turkey. That's how the interest rate, or sorry, that's how the value of the currency weakens. It's not that the government comes out and says we weaken the currency. What's happening is the Turks are flooding the market with lira because they're trying to get out of the lira, right? So a central bank raises interest rates, and they're trying to attract foreigners to put their money in Turkey, or for Turks to bring their lira back. They're like, hey, if you just bring your money back to Turkey, we'll pay you a lot higher interest, right? So that's what they're trying to create, a money magnet to change the flow. Because remember, they have a $70 billion loan coming up, or they have to pay $70 billion in loans coming up, right? So what happens is they have to pay that with foreign money, because the loans are not in lira, they're foreign money, and they don't have any exports, therefore they don't have foreigners throwing money their way, foreign money their way, right? So if the lira is weak, then they have to flood the market with at least 70 billion more lira to the market, and weakens it further. And I've described it before, so I won't go into the full Monty, but it's a vicious cycle where the currency weakens, therefore Turkey has to, flood the market with more lira, which weakens it further, which means they have to flood the market with more lira, which makes it weaker, and they flood it with more lira, and it weakens, and all right, so it goes on and on forever. Suddenly they jack up interest rates significantly, and maybe it turns a cycle around where foreign investors now say, well, it's not that I'm in love with Turkey, but at that rate, I'll invest. Okay? And when they invest, they have to do it in lira, so now they have to buy up all that lira in the market, and that lowers the supply of lira, increases demand, and that therefore increases price. Okay? So, David, that's what would do it. Okay? And that's why it's better to be a reserve currency. Okay? That's why it's better to be a reserve currency, because in this case, Turkey has this foreign debt, and they have to pay for it with foreign money, not Turkish lira. The United States, however, can just print money because their debt is in their own currency. Right? Now you see why it's better to be, the reserve currency anyways. Right? So now Americans will come out and say, shame on you, Turkey, you deserve it because you borrowed all that money, shame on you. Well, then Americans are borrowing all the money too, but the thing is, it's in dollars. So if you borrow a whole bunch of money in dollars and pay it back with weak dollars, it doesn't matter. It's dollars a dollar. Okay. Well, 24%. Like, think of it. That's what Greece was paying. Did it fix Greece's problems? Are interest rates now? Well, let's reverse engineer it. Greek bonds used to pay 24%. Do they pay 24% now? No, they pay hardly anything. Is that because, or what created that? Was it because a Greek bond paid that much? Well, what actually happened was Draghi, the central bank of the Eurozone, came out and said, I'll do whatever it takes to protect the euro, which was an implied guarantee. Okay, That was an implied guarantee. And what happened was, I mean, do you guys know all this? I mean, you should know all this. You know, I've covered it so many times in the past, but there might be a lot of newer people. Like, I don't even know if you're trading during the Greek crisis, but I was there absolutely every second of it. Maybe we should talk about it. I wish there's like a 30-second lag. I wish there wasn't. Yeah, so I don't know. So anyway, so what happened was Greece said, we need to borrow money. We'll pay you 10%. And everybody said, no way. And they said, well, we'll pay you 12%. And everybody said, no way. We'll pay you 15%. Everybody said, no way. We'll pay you 20%. Maybe. Okay. But foreigners looked around and said, well, look, Greece, you're guaranteed, you're virtually guaranteed to collapse. Right? And you're going to screw me over. You're not going to pay me back. Greece, if I gave you $1 billion, you're not going to pay me back. Right? That's what happened. Greece was virtually guaranteed to default. So they say, you know, we'll pay you 20%. We'll pay you 24%. We'll pay you 25%. People are like, well, that's really interesting, Greece, but I don't believe you're going to pay me back. Okay? And then Draghi said, I will do whatever it takes to protect the euro, which was an implied wink, wink, nudge, nudge. If Greece defaults, we'll bail Greece out, which means we'll bail you out. So go ahead and lend the money to Greece. Because if foreign investors didn't lend the money to Greece, then the ECB would have to lend the money to Greece. And that's a big problem. So Draghi just simply said, hey, wink, wink, nudge, nudge. Yeah, we'll bail them out. But he didn't say that. But everyone knew that's what he meant. So now, how would you like to look a guaranteed, right? How would you like to buy a bond, essentially? 24 pays 20 or 24% like Turkey, right? Pays you like 24% annually. And it's guaranteed. You will guaranteed make 24%. And then suddenly everyone bought those Greek bonds. And if you go back in history, you'll see that the euro skyrocketed in value because foreigners had to buy the euro first, and then they bought the Greek bonds. Then, because everyone is buying Greek bonds, interest rates for Greek bonds then fell. So, because it's first come, first served. So, the first hedge fund gets there, boom, lends $1 billion to Greece, and they get a 24% interest rate. The next hedge fund puts their $1 billion on the table, but now it only pays 23. Next, the next guy shows up, 22. Next, 21, 20, 19, 18. And it keeps going down because more and more money is showing up. And Greece, in that case, didn't have to pay as much because there was lots of demand. And 1 year later, Greek bonds were like 5%. Okay. So that, that's how they got out of that vicious cycle. And that's what saved Greece, foreign investors. So how does Turkey get out of this situation? Well, the first step is to raise interest rates to the point where foreigners are like, well, I'll take the risk. Now, can Turkey back up? Well, no one can back up Turkey, I suppose. Right? The ECB is not going to come in and say, well, if Turkey defaults, we'll pay you back. Or if you can't get your cash out of Turkey or something, right? So, but in this case, all you have to do now is put money into a Turkish bank and it's going to pay you 24%. You don't have to lock yourself up by buying a bond or sovereign debt or whatever. You just put the money in a bank. But the risk you face, besides Turkey just repatriating the money. So like several times in the last 20 years, Argentina, for example, going back to a country that's having a currency crisis again, There were times, because I have Argentine friends, there are times where you wake up in the morning, turn on the TV, and they're like, oh, the government took, I don't know, I can't remember the numbers. Let's say 20%. By the way, overnight, the government took 20% of all the money out of all of the banks. So 20% of your life savings is now taken by the government. And you're like, what? You're like, you did what? Like, yeah, the government just took it. For example, in the United States, I know someone that filed for bankruptcy and found out that the IRS took the the $3.50 that was in his checking account. The IRS took it. The $3.50. Yeah. Oh, Kev's in Argentina, huh? Well, right? I mean, there are lots of crazy things going on there now. I think interest rates are jacked up to 20% there, right? So like Argentina, for example, they peg, or at least they used to, I think they still do, peg to the US dollar. So when the US dollar goes up in value, they have to pay their debt in dollar terms, but they don't have dollars, right? So there's a lot of problems. Oh, David says yeah. So anyways, long story short, what's Turkey going to have to do? On the short run, they're going to have to jack up interest rates. That crushes the local economy. And that's why Erdogan is resisted doing that. But it gets you nowhere. Right? But now that he's been reelected, now he can jack up interest rates. That kind of stuff. I don't know. And then what? Well, what's the real fix? I talked about this about 3 weeks ago at the height of the crisis. What Turkey needs to do is they need to make something or provide some sort of service to foreigners. They need to export. Oh, Kevin, Kevin, I think do they take 60% or is your interest rate 60%? That would be, wow, unbelievable. But anyways, you can see these economies are in have serious problems, and they tend to last unless you fix them. Turkey has this very serious problem. Argentina has a very serious problem. Right? Venezuela has a very serious problem. Venezuela should be like Qatar, one of the richest countries in the world. It's not. Qatar is capitalist. Well, sort of a command system, but capitalist nonetheless. Not democratic, really, I don't think. But anyways, it's socialism is the evil, I think. So anyways, so all the way back to Aussie, guys, all the way back to Aussie dollar. Is this a significant technical change? Well, you need to you need to make the decision there, right? Quite a few thumbs up. I appreciate that, guys. I know we got a little esoteric there. I'm just responding to questions and stuff. I feel like I got off track there, but hopefully it was still interesting. See, like, I don't know if you were around for, like the Greek crisis and stuff. I don't know if you were around for the financial crisis of 2007. I was there as it happened every single minute. And I remember it was like yesterday. Now they teach it in the school. Yeah, so like, put it this way, it's really surreal. I'm at Harvard and they're teaching it in economics class. And there are people in my class that in 2008 were like in elementary school. They were taking the school bus. I'm like, oh my God. They were children. And to me, it's like yesterday, honestly. I remember going, what why don't I know more about credit default swaps, right? I remember thinking about that, right? I remember thinking, I need to know more about credit default swaps. I remember the time I'm walking, every day I would walk back then. I'm doing my 1 mile lap in the morning, and I had a headset on. And this was way, way, way back when, I would podcast before people even heard of a podcast. And I would download, I think I'd get the Wall Street Journal read to me. Every day someone read into a microphone the front page of the Wall Street Journal, literally word for word, that kind of stuff. And so I'd listen to the Wall Street Journal as I did my walk. And I'm like, wow, it's the end of the world. Capitalism is collapsing. There's going to be food lines and a Great Depression and all this kind of stuff. And we're blaming credit default swaps and collateralized debt obligations, and I'm like, I'm just a currency trader. Why don't I know this stuff? I need to know more about collateralized debt obligations. And now they teach it in school to like people that were children at that time. It's just amazing because it makes me old, and I don't look old, right? So I don't know. It's very interesting. So I was there through all these crises, and so Greece, I remember the exact moment and trading it and all that kind of stuff. So it's real history to me. So I forget if you don't know, like, what happened with Greece and what was Greece all about and what fixed it and all this kind of stuff. It's cool as an experienced currency trader to have lived literally every minute, waiting for the next announcement, waiting for the next ECB meeting, hanging on every word. Literally not in the moment, per second, not even per minute, per second, participating in these crises and trading all the time, right? Versus reading the newspapers. So anyways, Aussie dollar. Is this enough? Is this enough? One of the things we're talking about is the change in trend, right? So let's go to a smaller time frame here, maybe an hour. At what point are you going to say, all right, I believe it's making higher highs and higher lows? Okay. So one of the things we have here is if you were a bear, the gray area is a sell zone. So where are the bears? Really? Lehman has a Menlo Park office? Huh. Didn't know that. So anyways, at what point do you say plan B? Plan B for bulls, right, is this, right? Something to that effect, right? It's your job now as an analyst, not even as a trader, but as an analyst, right? You need to say, has it reversed? And then as a trader, you need to buy a dip or something. But before that, you have to analyze the situation and make a decision. Okay. At what point do you start buying dips? Now you see what I have here. Let's see if I can remove this. This was the sweet spot I identified yesterday. If you were a bear, this goes back further from a plan. I don't know, 3 weeks ago. I wonder if it'll be important. Remember when I drew that? So now I wonder if it's going to be an up, down, or up. Okay, so if you said you were a bull now, and I think the next real challenge is this area or getting up here. I mean, it's not perfectly reversed until I guess until you're way up here, right? So the monthly goal here would be this. More likely it's just going to go to this top, but I've already covered all of that. But let's just say there's a full-on massive flow of money and risk on and everything's good. Australia's going to raise interest rates. I don't know, whatever. If we were on our way to this 83 area, right? If you think we're at least on our way to that area, aka you're a bull, what you do is you put yourself into a scenario where you're constantly just buying dips. Okay? Constantly just buying dips. And that's what the bias is. You're a bull. And then the tactics is up, 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 down, down, buy. Look, it bounced at a pivot point. Radical, dude. Right? Up, 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 up. Right? How many times have I done this? 1,000,000 times? Right? New higher high, look left, drag it across. That's the new buy zone. Right? So on and so forth. Up, 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 up. So maybe this just keeps moving, right? But you see, like, the hardest part is making the decision that you're no longer a bear, you're a bull. See, a bear would have sold here and a bear would have sold here, and that should have scared you out of buying. So I'm not saying you should have been a bull here, you should have been a bull here, you should have been a bull there. Could have, of course. But you would have... we've been in a downtrend for quite some time. Bears had every opportunity to sell, so on and so forth, but they didn't. So anyways, at some point, if you're a bull now, right, up, 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 down, down, buy. So you buy here. Up, 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 down, down, buy. You buy here. Up, 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 down, down, buy. You buy here. On these smaller time frames. But remember, on the smaller time frames, you're going to get this move, and then it's going to fib itself. So it's got to make its up and a down, and then an up and a down. And these 15-minute moves very often are timed around market opens. So you could go back and you could see things like Asia Open, London Open, right? New York Open, something to that effect. Oh, you don't like buying on a Friday? Well, first of all, I wasn't saying you should have bought it. What I'm saying is if you make the decision now or have recently made the decision to be a bull instead of a bear, that's how you start tiptoeing in. Right? This high, buy the dip. Next high, buy the dip. And you buy the dip until you get into here, and then it's probably going to do this move here. Right? So there'll be a reasonable down. But this will probably happen, let's say, New York afternoon and maybe Asia fade. And then tomorrow, London Open, you rally it back up to the next level, right? So it could be like London close, right? New York close, Asia, and then Asia close, Europe open, London takes it up tomorrow. So up a little bit more today, fade the next, next 12 hours, and then boom, up to the next level. Okay. If you've made that decision, I'm not saying it will be going up now, but you need to make that decision. Did that happen? Yes or no? And it's your job as the expert to make that determination. Okay. Now, of course, and I believe we've talked about it 2 or 3 times, but I guess this is a good time to remind you that if that's the bottom, then the top is the R. So I drew this big orange, this gray area on top of it, and I put this orange line, and we went back. So the likely, if you're using analysis and not guessing or hoping, okay, the math, if you will, says the top of this is going to be about 81.5, let's say. Okay. Not likely 82. Would you put the stop under the gray line? Well, the thing is, if you're trading like a 15-minute chart, you're supposed to be stepping up, right? So in this case, up, 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 down, down, buy, right? When you're up here, let's say, let's do it this way. So when you're up here, you look left, drag it across. This orange line simply represents where you want to buy. Even though you're up here, you want to buy down here. But if you're up there, you already entered this one. So now you need to move your stop at least to break even here, and then look to enter this. Then you get to this orange line, you get a 5A cross, so you're long again. Okay, and now you're up here, which means you move your stop to break even, which puts you about here, right? You got this new high. You got to move this guy out of the way. Okay, so you got your first stop here, or your second move at break even. Your first move, you should move to break even, to that break even. So now you have one locked in profit, the other one locked in at break even. This is a new higher high, and you know this is a 15-minute chart, so you'd be zoomed in, and now you're looking for a fib. So now you're gonna fib it. You're gonna do this, and now you have your new sweet spot, right? Oops. So this is your new sweet spot. Plus this is your old role reversal, which you've already identified, right? So right now your trade plan for this move is down, and I'll just put it there for fun, and then up to the next level. This is your just day trading, super easy stuff. Oops. Okay, and it'll come up here, and then it's going to hit resistance. Then you're going to look left, and you're going to drag this across, and that's going to be your new buy zone. And now you're going to fib that. Okay. And that's your new sweet spot. So now your next plan is buy the dip. Okay. But what I'm saying here is when you run out of time on the smaller time frames, it's probably going to fade back down in the off hours after the New York close, and certainly after the London close, and certainly after New York close. It could fade a while, and you might end up buying it way down here at London Open tomorrow. Okay? And starting this whole daily process back up. Okay? So you're on a weekly, huh? Yeah, Scott, I'm just worried like that you're too zoomed out. I mean, there's nothing wrong with it as far as analysis, but for trading, I try not to go out weekly and monthly. I'll tell you why. The technical analysis, I mean, it's important, but what it doesn't display to you is the current macroeconomics and central banking policies that are in play. And the past does not necessarily predict the future, right? So over here, you're just looking at pure technicals, and you're ignoring any fundamentals that would have created them. So the farther I back out, you know, weekly and monthly and all that kind of stuff, I feel like it's too technical and not fundamental enough. Because the fundamentals are predicting the future. If you can understand what the central bank's decision process is and what information they're processing to make a decision, and you can anticipate their new policies for managing an economy and thereby indirectly a currency, then you can predict those currency moves. simply looking at like a weekly chart or a monthly chart, all you're looking at price and time, and you're ignoring what created these moves, okay? There's no doubt that some of these price levels are important, but what you're missing is what's going to be important next month, at the end of the year, next year, okay? So what I try to do is keep that in mind, the fundamental analysis, right? And then I'll look at daily and lower, looking at price levels to which I would enter my fundamental bias. So if my fundamental bias makes me bearish on the Aussie dollar simply because the Reserve Bank of Australia is in of itself very negative on the Aussie dollar, then that's good enough, and I look for opportunities to sell. So if I'm still a bear, I would look at this and say, this area was very unfortunate it didn't fall. Maybe this is a good place to sell. And that's another reason why you get these pullbacks. Okay? So I try not to go farther out because this is enough information technically, and fundamentally my decision doesn't change often. I change my fundamentals every few years. I change my bias, right? So if I'm still a bear on this, then I simply find the next level of resistance in which I want to sell. And of course that would just be simply up here. Okay. What I'm suggesting is if you were not a hardcore bear, and if in fact you wanted to be a bull, this is a very interesting move. Is it bullish yet? No, this wasn't bullish either. This was set up on the head and shoulders, right? Remember that? We set it all up and it went up a couple of hundred pips. We nailed it. What did it do? It went back to the last level of support, which then became resistance, and we sold again. So bears still live here. And bears are still going to sell this. It'd be very interesting, however, if we were up here, then that changes a lot. But we're not there yet. So bears are still going to sell the heck out of this, and probably pretty soon. Does it say that here? Yeah, maybe. But that's why I drew these lines anyways. I mean, we already know that stuff, right? So there are bears here for sure. That's why I have a gray zone and an orange line to remind us. Okay. Cool. Remember when I pulled this up? Now it's collapsed. Cool. Neato. So you need to treat this as this is resistance, this is support, and we're trading in the range. Like, let me adjust this. Okay, that was the potential breakout. All right. So really, maybe I should adjust this. Let's move that for another day. So currently you need to be thinking about this as a range. Okay? Nothing more, nothing less. And you tell yourself it's going to move sideways forever. Okay? It's going to move sideways forever. Okay? Until it breaks. So just assume it's going to go down here and then back up and then back down, then back up. You have, right? That makes you a neutral bias. You can range trade this and stuff, or just walk away. And you could just simply walk away until it does break. Okay? But it's been doing this almost 2 weeks. Okay? So you see that? Just let it break. And you don't even care if it breaks to the upside or breaks to the downside. You just wait for a break. Okay. All right. We got a request for oil. I'm happy to do that. Okay, oil. Seems reasonably valid still. We have it going up from this X, which was a target from this sell. Then we have it going back up into the resistance and then getting stuck there, which is not far off. So like 3-4 weeks ago, we had it going back up to 70. I have it here at 71.25. It went to 71.00 because obviously it updated to catch the new pivots, and then back down, and then back up, and then coming back down again. Seems like we have this highlighted too as a monthly M2, which is a buying pivot. So once again, I try to get you to think of it. If you're a bull, you buy obvious support, which this clearly is obvious support. Right? I think we even talked about it while it was falling. Yeah, I'd buy it here kind of thing. Right? Or if you're a bear, sell obvious resistance, right? And I think somebody treated this as a double top, right? So right now, probably just move sideways a little bit. Okay. Bulls are looking for opportunities to buy. I think the world is trying to figure out what to do. That's why I have it making up and then a down. Okay. Roger says, can you short the double top? Yeah, if you're a bear. I mean, there wasn't anything else to do as a bear, right? So, okay. So 2 or 3 weeks ago when I drew this move, I was hoping this area just slightly above, right? You can see I drew this. We were hoping this area slightly above would have been the resistance. We didn't quite get there, but you can see the technicals updated, and that's a perfect place to sell, right? It rallied up, hit the target on a Tuesday, which is, by definition, the counter trend. Traded down into the monthly pivot, and again, by definition, this is where a bull buys. This is where a bull takes profit. This is where a bull buys. Now we've hit here. Looks like bears are taking control, but I would argue that we already had that planned. Right? So may you short it. That sounds past tense, like you haven't made the decision yet. If you haven't made the decision, let's say, where should I do this? Let me put an X somewhere. If you hadn't made the decision, let's say down here, to sell a double top, then you don't deserve it. See, you should be waiting for it to rise up in here and have already sold it when you were up here. So now you want to sell it. The best case scenario for you now is this. And this is what we call a hammock. Okay? And that's just a secret word for a pattern called a 1, 2, 3. Okay? 1, you have the double top. 2, you have the lower low. So 3, you need the lower high. And where's that lower high likely to live? Well, we drew that 3 weeks ago. I know, right? Yeah. So it's not chasing if you have this set up. See, you never try to chase price if you have a trade plan. Okay. Now, I would like this to go up and hit a monthly target. It's just not quite ready. We still have 2 more weeks in the trade plan, right? Eventually, oil, I'm hoping, is going to go to 74. But it certainly can drop to 67 first. That's fine. Rather not, but it's totally fine. Okay. Okay. And that's what this is about, guys. You see? So how are we going to get beyond 72 up to 74? That's going to be tricky. We're going to need some good macroeconomics. Okay, gold is doing its thing. Okay. It's doing its thing. It feels sideways to me. There's no really good monthly entry. I mean, it's okay. There isn't a really good weekly entry. It's okay. But it looks more sideways than up. You'll say, well, it just rallied. Yeah, well, it just rallied into resistance. So until it breaks above some of these levels. But this is what this channel's for, right? To measure this correction. A break of the correction might be the resumption of this upward move. I could see that. Okay. Now, we had this set up for a long time now. So, I don't know if you stick to a trade plan or not. But that's why I draw these things for you guys. There's an up. There's the down. There's the up. Right? There's the down. There's the up. Right? So on and so forth. So, I don't know if you follow these up or if you write them down. Or if it's just like a learning exercise, Cool. And we did that, did USD Kitty Cat. Okay. So we're down to support. If you're thinking about buying it, you're pretty close to your price. The basis of you buying it is the idea that bears are supposed to take profit soon. Got it? And because of this breakout here, this gets moved. Let's do it kind of like this. That's sort of the new channel. Okay. This is mostly supportive. That's mostly resistance. Okay. Well, John, as far as the drop, that's where you'd use technicals. So you'd use like a cross or a rollover or something to confirm it technically. Okay. But as far as your your research on oil and hurricanes and all that kind of stuff, yeah, and I've done dozens of videos on such research. Oh, yeah, I just noticed the live video has the wrong date, but typically it doesn't have a date associated with it. So that's really, 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 really strange. Yeah, yes, we will have to update that. There's a glitch in the matrix somewhere. Yeah, I notice YouTube is suddenly lagging quite a bit here, so why don't we pull the plug? We'll call it a day, and I will see you tomorrow for Friday. Maybe it's my processor slowing down or something. I'm not sure. But anyways, peace on earth. May the pips be with you. May our profits be above average. Please visit tradersway.com, open an account. Make sure you take the time to subscribe and thumbs up type thing. And if you're watching the recording, please leave a comment. If you're watching it live, just in 20 seconds, refresh and leave a comment then. But anyways, thank you for being on my team, guys. I appreciate you, and I will see you tomorrow. Cheers. If I can find the software. Hello.